We could be entering the first bear market in bonds in over 40 years. This could radically change how pensions, banks, and other large financial institutions invest. Here to break it all down, Jonathan McCoy with Market Advisory Group. First off, for those who aren't familiar, what exactly is a bear market?
Well, it's easy to get caught in the weeds here, but a bear market very simply is when some asset, whether it's bonds, gold, stocks, real estate, is dropping in value consistently over a long period of time. So in bonds, we've actually seen that bonds have been gaining value fairly consistently since the early 80s. Now, since the pandemic erupted in 2020, shut down the economy, interest rates hit zero, we had nowhere to go from there but up, and we're starting to rebound into this period where bonds are actually losing a historically significant amount of value in a very short period of time, and this does drastically impact especially how pensions are going to be managed financially.
And so for our retirees sitting at home, how should they be reacting to a bear market?
The struggle is when there's a bear market in stocks and bonds, those are typically the two assets that we keep in a balance. A lot of people use the 60-40 approach, saying I've got 60% in stocks, 40% in bonds, and we're trying to diversify between those two asset classes. But when they're both dropping, you really don't have a whole lot of diversification as far as risk offset. So we've got to be looking at other asset classes and, more importantly, different types of income producing assets that will help people survive through retirement.
And interest rates, they are going up. We hear about it all the time. How exactly is that going to impact people with retirement pensions?
So pensions in particular are investing heavily in the bond market. They need that sense of security, that higher level of stability to make sure that they can continue making those pension payments over time. Well, recently we've actually seen that people that have access to a lump sum from their pension when they retire, those lump sum estimates are actually dropping because the future projected value of those pension funds is dropping as bonds have entered into what could be turning into a bear market.
And Jonathan, we do have a viewer question for you. This one's from Linda L. Linda asks, our advisors sold us annuities and other investments years ago. We are close to retirement and still feel unprepared. We don't know what to do with Social Security. We have no estate plan, and we aren't clear about how much money we will make when we retire. Where should we start?
Well, I will start with a little bit of a shameless plug for Market Advisory Group. Ultimately, we do start with a high level of education on Social Security benefits when people are getting ready to retire. It really becomes the foundation of that income resource that you're going to need to live on. So ultimately, I recommend that anybody, if you've got an advisor that is more focused on where your money is invested and not exactly how it's going to be producing you income and sustaining your lifestyle throughout retirement, Social Security being a big part of that, Social Security doesn't necessarily have a lot to do with how you're investing. But then you go longer term into things like the estate plan. How are you going to deal with health insurance and health care, with Medicare? So at Market Advisory Group, we associate ourselves and have hired in-house under one roof the Medicare advisors, the estate planning attorney, the CPAs to help us with those tax planning issues, in addition to the financial advisors to make sure that we've got that holistic planning approach from day one.
I mean, it can be really overwhelming, so it's always good to ask for help.
And even I need the other professionals to come in because, you know, ultimately financial advisors are not going to be licensed to give advice in all these different areas. That's why we've brought all those professionals in-house at Market Advisory Group.
Perfect, Jonathan. Thank you so much.
Thank you.
And to schedule a complimentary consultation and submit your questions, visit AskOurAdvisor.com or call 816-548-2000. They'll take your questions and even meet with you one-on-one free of charge. If you include your address, Market Advisory Group will even send you a free gift.